I guess one of the things that struck out for me at the OECD was the discussion with a couple of the central bank governors, and the theme of the discussion was prompted around what Libra, or Facebook, is doing with the Libra and Calibra project, but also the efforts with China, but even more broadly just monetary policy and this talk of us going into negative interest rate territory. Apologies, that's my baby in the background.
She agrees with you.
Yeah, tough times ahead. And I guess in the GFC of 2007, 2008, we saw the reduction of the cash rate by 3 or 4 percentage points. And at that time, we were kind of at the 10, 11, 12% and could afford to go down a couple of percentage points in terms of monetary policy. But there's criticisms that monetary policy isn't working as well as it was designed to, because we've now never recovered back to the likes of the 10, 11, 12. And with our RBA just cutting the interest rate, was it last week or earlier this week, to 0.75%, we could be going into negative interest rate territory. And so the challenges, whether the commercial, how the commercial banks will respond is a different thing, but we've seen in Denmark earlier this year, apparently is the world first negative mortgage where they're paying you to conduct your lending business with them, but with the corollary being that you pay to have your deposits stored at the bank. So with that context in mind, it doesn't make sense to store or hold cash as a store of value in a traditional commercial bank account. And with that as a macro trend across the global economy, then they then look to crypto to say, well, yes, it's Bitcoin and cryptocurrencies like Bitcoin have been volatile and not a good store of value, but relative to negative interest rate territory, it actually makes more sense to keep some value with crypto. And this is not financial advice, but some of the trading bots that ask you to deposit a certain amount of Bitcoin and then guarantee that you'll always get that number of Bitcoin back. I mean, there's not a lot of contracts around it, so question the enforceability of that, but at least that's the promise. They then use that Bitcoin with the trading bot, and they're not just promising but delivering on daily returns of upwards of 4%, which is better than any interest rate on a traditional bank account or a term deposit in Australia right now. So I guess when you look at those factors, there is some justification for storing cash by way of deposits in things that are not fiat and not run by central bank, commercial banks. So that might be one of the motivations for our central bank and other central banks to issue a CBDC or a central bank digital currency. But there are other motivations